on Constitution Avenue, so I hope you are ready for some deep information on the Wall Street tax. We have a series of extraordinary panelists who are going to be confined to speaking for 5 minutes each, so I will quickly try to get out of their way. They are amazingly talented. The first person speaking will be Sarah Anderson from the Institute for Policy Studies. Sarah has been convening people globally around the Wall Street tax for many years, and I think is one of the people who gets huge credit for all the progress that's being made that she's about to describe. She will be followed by David Hillman with Stamp Out Poverty from the UK. David, I think, has one of the more extraordinary records of driving change forward to advance global justice, and he'll bring both passion and important perspective to his presentation. After David will be Jared Bernstein, now with the Center for, I'm going to get your E's and P's on, the Center on Budget and Policy Priorities, and is previously a chief economist in the office of Vice President Joe Biden. Jared is an awesome economist, and he's unusual in his ability to translate really complicated things into really understandable common sense language, and I'm sure he will do that momentarily. He'll be followed by Heather Slavkin from the AFL-CIO. Heather is an extraordinary ally inside the labor movement, both on sort of some of these global issues and also on domestic financial reform issues. Gets a lot of credit for the achievements in the Dodd-Frank Act and none of the blame for any of the problems in the Dodd-Frank law. Heather will be followed by Andrew Hanauer from the Jubilee USA Network, which is a network of faith-based as well as labor, environmental, and global justice organizations that's worked on global poverty issues and especially on debt cancellation. And from a tiny little office of people burrowing away has accomplished amazing things for people in the developing world. The topic, of course, everybody's going to be addressing is the Wall Street tax, sort of this confluence of all the things you'd want in a tax. A really small tax, hyper-progressive in its focus, aimed at activities we don't like with the ability to raise enormous amounts of money. Everything going forward, except some challenges politically, which we're going to have to overcome. And our panelists are going to talk about that. We'll go through it, and we'll wrap up and have some time for questions. Sarah, you're up.
I'm really excited to be here to talk about this because I think we all have to admit it can be very frustrating working in this city, and we have very few opportunities to work for change that is truly transformative but also winnable. And I think what we want to do here today is persuade you that this idea of a Wall Street tax, or sometimes known as a financial transaction tax, is both transformative and winnable. And I'm going to just give a brief overview on some things that other people will go into more depth on. And so I'll just start by explaining why I think this is a transformative idea. And that's because it would help return our financial system back to its proper role of serving the real economy. What we're talking about, as Rob said, is a very small tax on each trade of stocks and derivatives and so forth. And because it's on each trade, it would discourage short-term, high-frequency trading that now dominates our markets. And Heather will go into this a little bit more detail, but this is the kind of trading that has little to no real social value, is sucking profits from traditional investors, and can contribute to instability. John Fullerton, who's a former managing director of JP Morgan and a big supporter of this tax, likes to say that high-frequency trading didn't cause the last crisis, but it could cause the next one. For the ordinary investor, the cost of the tax would be negligible, kind of like a small insurance fee that could help prevent future crises. And the FTT, like Rob said, would also raise significant revenue. How much? Well, it depends. One thing we put together for this briefing is a list of all of the bills that have been introduced in this Congress that include an FTT, and you'll see that they vary in terms of their rates, the kind of financial instruments that are covered, their exemptions. The CPC budget includes an FTT that is estimated could raise over $900 billion over 10 years. There's a JCT score on a Harkin DeFazio model that would raise $350 billion over 10 years, and then there's the Ellison model with a bit higher rate on stock trades that could raise even more. But whatever their technical differences, I do think that the work that's gone into all of these bills has really helped shift and move this transformative idea into the mainstream debate. Not without a lot of help from folks outside of government, though, and that's where I'm going to turn now to get into why I would argue that with a lot of hard work, this idea is winnable. The first reason is that there's a passionate base of support for this. I would say that there's no other tax proposal that has brought as many people out into the streets as this one. And a lot of the credit for that goes to National Nurses United, which has mobilized their base and their diverse allies around the country. Around this, I think their slogan of Tax Wall Street, Heal America really has broad appeal. And you'll hear more from other speakers about support for this from the labor movement as a whole and from faith groups and others, but there's really passionate support for it out there. A second reason is that the financial industry is divided on this. I mean, yes, you will hear from the big bank lobbyists that this will destroy our economy and that kind of thing, but there are others within the industry who see it very differently and support it for the kind of market stability reasons that I mentioned earlier. And just some of the prominent people who've come out for it include George Soros, Bill Gates, the founder of Vanguard, John Bogle, the Reagan budget director, David Stockman, and former FDIC chair, Sheila Bair. Thirdly, it's winnable because it would be good for Main Street. We brought copies of a column from Fortune magazine by the chair of the Ben & Jerry's Corporation. It's this one outside, and he talks about how back in the 1970s he got the first loans for that company and that it was really pretty easy back then. But today a lot of small businesses have a hard time getting access to credit. And one reason is because the lure of just hitting those jackpots on Wall Street is so much more powerful than the attraction of more patient, long-term investments. And we have the Main Street Alliance co-sponsoring this briefing today, which is great, but I think there's a lot more potential in that sector. And then finally, this is winnable because Europe is really going to embarrass us on this because they are moving ahead, and we're going to hear from David Hillman more details about that. But once European nations start implementing this, it'll undercut one of the main arguments against it here, which is that if we do it in the US, our trading will just go elsewhere. And once they start raising a lot of money, I think it'll really open a lot more lines here. So in conclusion, I would say winning will not be easy on this. We don't have bipartisan support yet, but I think the issues around market stability and concerns about possible future bailouts, it cuts across the spectrum. And I think this is a cost-effective way of reining in some of the most reckless financial activity. We also don't have support from the U.S. Treasury yet on this, but I think they're looking at it more carefully now because of the progress in Europe and because of the increased concerns over high-frequency trading. So it's going to take a lot of work, but I do think it's winnable, and I look forward to working with many of you on this. Thanks.